Okay, so Jimo and Com, we are to prepare the statement of affairs as at 1st April 2004. Okay, so dear professors, as you all know, your statement of affairs is listing all your assets and then you list all your liabilities. Okay, but then you should only focus on assets and liabilities on 1st April 2004. Okay, so that's our currency for you. So professors, please help me assemble all the assets that we have in the question. Yes, whoever is ready can take me.
Debtors.
Okay, so we have debtors. So it's always important for you to first look for your fixed assets if there are any. If there are no fixed assets like building, furniture, plant and machine, etc., like you go on to your current assets. So here, like she rightly said, we have debtors. Please, any other?
Stock.
Also have the stock. And what else? Mame, Profia, can you assist us? She's mentioned debtors and the stock. What is left?
So please, I think that's all.
Okay, so Profia thinks that is all. Prof. Natasha, do you agree with Profia? Prof. Natasha, let me hear from you. Okay, let me pick on Prophet Chan. Is that all our assets, or there's one or two or more we have to add on?
Please, the cash and bank balance.
Okay, okay. So it's always important. I think I've been hitting on that point that you see your assets include cash and bank. Yeah, Prof. Yeah.
No, please, sorry, I wasn't looking at that other table. Sorry.
Oh, okay. So always pay attention to that. See, this is our bank account, right? And we have a balance brought down. Balance brought down is normally at the opening date. And if you analyze this question, the opening date is 1st April 2004. So if we were to date this balance brought down, we're going to write 1st April 2004. So this is a balance on bank at that 1st April 2004 and should form part of your assets for that particular statement of affairs. Okay. So, dear professors, let's put in the figures. So our stock is 41,000. Then the debtors figure is 26,000. And finally, we have our cash. Sorry, it's bank. Okay, from the bank account, the opening balance 40,200. Okay, So these are the assets that we have in there as at this time. So you add all of them together to get your total assets. Prof. Natasha, can you give us our total assets by calculating it for us using the calculator? So what is our total assets, please? Okay, whoever is ready with a figure can give it to us.
107,200.
Okay. $107,200. Okay. So we less our liabilities on that date. And if we go through, I think we see creditors for goods. And the first table, we also see expense creditors. So expense creditors more or less is like you owing expense, right? Then we also have the rate owing. So let's put them here. We have creditors for goods. We have our expense creditors. Then we have rate owing. So these are the three liabilities we have in there. We put in the figures, get the total and less from the total asset. So we have 17,000 for the goods. For the expense, we have 9,000. And for the rates owings, we have 1,200. So altogether, what will be our total liabilities?
$27,200.
Okay, 27,200. So we less that from the total assets to get our capital. So our capital as at 1st April 2004. And since that date is an opening date, you can call it opening capital. Okay. So either you write it this way or you indicate opening capital. And I think that should be 80,000. Okay. So that's our statement of affairs. Very simple. I want to believe all those of us who attempted had it correct. If you have any question on it, please let me know before we move on. Any question on it? No. Okay, now we move on to prepare the debtors account. Debtors account. So this is our debtors account. And as you all know, for your debtors, you pick your opening balance on debtors, how much was paid or how much was received from them. Closing balances, watch out for any return invoice, bad debt, discount allowed, right? Okay, so what's the opening balance on debtors, dear professors? I think it's 26,000. So balance brought down 26. $26,000. Let me make. Then we put in how much was received from debtors during the year. So dear professors, how much was received during the year from our debtors? I think Prof. Ella can answer this for me. Prof. Ella?
Yes, sir. Sorry, please, she's in, sir.
Okay, so we received 62,000 from
Sir.
Yes. I was asking how much did we
Please,
receive?
did you call me?
Yes, how much did we receive from our debtors or customers?
How much do you receive from debtors?
Yeah.
62,000.
Okay, 62,000, that is.
62,000, please.
Okay, thank you very much, Professor. So if you see in the cash book, it's here cash from customers or debtors. So cash 62,000. Okay, then what next do we put in? Prophet Chan, what next do we do?
Please, balance carried down. $24,000.
Okay, so our closing balance or carry down is 24,000, like she rightly put it. So balance carry down 24,000. Then you balance it and know your credit sales. So if we do the balancing, I think this side will be 86,000. That's the total. 86,000. So leaving us with a difference of 60,000 as our credit sales. Okay, very simple, very simple. Make sure to underline your figures and indicate your brought down. Okay. Please, any question on the debtors account? I don't think so, because we have been solving this on numerous occasions, so we are good to go. So that's debtors account. Please, any question before? Debtors account. Please, any question before? Okay, no questions. We move to the creditors account. Creditors. And I want to believe that I wish I could skip it because it looks very simple. So for our creditors, again, we'll pick the opening balance, how much we pay to them, and energy please, apologies, professors. I think somebody's energy is up. Prof. Johanna, you are welcome. And I hope you come with the energy. Okay, so for our creditors, we need the opening balance, how much we pay to them, and the closing balance. So as we see that now, actually you have two creditors. So I don't know if that confused my professors. Let me get some insight from you on that. So which of them did you pick? Is it for goods or expense? Or you combine the two. Yeah, Professor.
So I was a bit confused. So we are combined the two since they are both creditors.
Okay. Did any of you also? Yes, Profama.
Yeah, I chose creditors for goods.
Okay. Let me hear from. I think Prof. Bridget did not. I'm not sure she attempted the question. And Prof. Natasha. Is Prof. Natasha here? No. Prof. Sanam, what was it for you? Did you combine both or? Okay, let me hear from Prof. Ya, and now I'll pick Prof. Chan and then move on. Prof. Ya, how did you go about?
So please, I didn't attempt to, but I think I would have gone for the credits just for goods.
Okay. Prof. Chan, I'm sure you. Okay, so let me actually check those who have submitted. I have Ella, Hammer. Okay, Prof. Chan, you did it. So let me hear from you.
Please, I chose the creditors for goods.
Okay. So it means that out of my 11 professors, only 3 have submitted. Wow. Anyway. Okay, so yes, this is the point. Now, this creditors account we are preparing are actually referring to those who supply us with goods, because at the end of the day, we are looking for our purchases. And what do we purchase? We purchase goods. So the expense creditors is more or less like expense only, right? And does not form part of our creditors who supply us goods. And for that matter, does not relate to purchases. So the best choice here is going for your creditors for goods. Goods. Okay, because those are the group of people we refer to as our creditors or suppliers, right? Those who give us goods on credit. Okay, so we'll pick that figure. So Professor, I'm sorry this time. So balance brought down would be 17,000 at the credit side. And then we pick how much we paid them. So we paid them cash paid to suppliers 32,600. So the cash paid to them was 32,600. Okay. Then we put in their closing balance, which is 15,500. That will be a carry down at the debit side. So we balance it and get our credit purchases, right? Okay, so the total I think should be 48,100. If we less 17,000 from that, we should get 31,100 as our credit purchases. So that is our creditors account. Very simple. Very simple. Okay. So I bring down my. Okay. What is left on the table is for us to prepare the trading profit and loss account. I think we'll do that in the next session. We are almost through with this session. So I'll see you in the next session. However, I have some important things to put out there for you. So let me end the recording and I'll do that.